So here we go. I'll go through that first part really quick. If you've not taken a free trial with us, go to the homepage here at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Any place that says free 5-day trial. Click on that. It's going to bring you to, oops, it's gonna, not that one. I have to fix that. It's going to bring it, it's going to bring you to, oh, that's because I'm not clicking it from the homepage. If you're on the homepage at cfrn.net, and just go down to where it says free 5-day trial, no credit card required, click on that. And it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. Tell us the biggest trading challenge if you want. Hit the send button. And once you do that, you'll be sent to confirmation link. You must click on the confirmation link. Okay? Okay, here we go. This is today. Correct. Today is the 14th day of July, 2021. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we made 18 ticks in crude, 9 ticks in gold, and 4 ticks on the ES. Put us at plus 320 on the morning session. Today it took 20 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 18 trades. So on the month now, we're up $6,127. That's over 9 trading days, averaging $680 per contract per 2-hour trading day. On the year, we've gotten our goal for the day on 132 out of 133 days. We have now gone 100 consecutive days, knocking on wood, of getting our goal. And we're at $87,017. That's over 133 trading days, averaging $654 per contract per 2-hour trading day. Okay, now let's get into it all. It doesn't really matter where we start. I'll just start with gold. Okay, now keep in mind, everyone, that at the end of the session this morning, I said, or toward the end of the session this morning, I said, at the bottom of the hour when the European markets close, I think things are going to start to move around because we had a really dry day. Things got really bound up, I guess is the best way of saying it. But either way, on gold right here, this was our first trade opportunity that we took on gold. I believe it was our first trade opportunity as well. Yeah, we started out right here. I actually got in early this morning. Saying we were in this wedge and we had to break out of the wedge, and we broke out. We had a little bit of a trend going here, so we took a short right in here off the BBC. We ended up with a break even on the first one. Then we picked up 4 ticks on the next one, then 4 ticks on the one after that. We missed that one and that one, but we picked up 4 more ticks there to put us at plus 8. A break even there, a break even there, a break even there, and you see it got in this chop right here, and it was given trade setups, but we really didn't have a trend. I wanted to get out of this trend, so we had a trade right there that would have given something, a trade right here, nope, not there, right here, that would have given something. Now this would have been a break even for me. This would have been profitable. We picked up 1 tick here once it broke out of it, and then that was pretty close to the end of the session this morning. I was actually looking for another trade right in here, but the cycle went down too steep. And that was the end of the morning session. So we ended up with 1 more tick to put us at plus 9 on the gold. In here during the break, there was 1 short right there. And that was really it during the break for gold. Now, crude oil was a lot of fun during the break, so I'm going to save that for last. The ES. Now, the ES, you can see right here how sideways it was. And this was the last half hour this morning. It was all sideways like this. And it kept trying to get down here to these levels. It was showing these levels down here. Okay, so I was taking little bits at a time. Now up until here, we had only 1 break-even trade on the ES. It was right here. Okay, no, we had 2 break-even trades. Sorry, we had that break-even trade and then 1 more. Now over here, it was showing that it wanted to get down there, but it didn't give us a trade setup to get down there. Okay, then we had this all the way down here that it was trying to get down to, and it took forever, but it eventually got there. Okay, we had these things up above and a weekly trading zone up above. So when it was showing alongside, I was really thinking it was going to push up there, but it just never followed through on any of them. Never followed through. So then it started going down. It was showing all these numbers down here for it to get down to. And so on this one right here, we picked up 3 ticks to put us at plus 4. Actually, yeah, we picked up 3 ticks to put us at plus 4. Did we pick up 3? I don't know. I didn't write this one down. I think we picked up 4 more ticks right there. But but I didn't put that in. But we picked up 3 there to get us to +4. I think we picked up 4 more there to get us to +8. And then right in here we had another break even. And then it got really sideways. And at the end of the morning session, I had said, look for it to get down to here, because it made this move down, but didn't give us a trade set up. This was right at the end. You see 11:24 to 11:28. So we're closing down the morning session right in here when it made this move down. I said, look for it to get down to here, and then went really sideways for a few minutes, and I stayed in there. But then it came right down and hit that right as we got into the break. Now, during the break, there was one more shorting opportunity right in there, and then it made this big run up just recently here. Once we hit noon, it made this big run up. Now, Powell is testifying right now, so I don't know what that's going to have to do with any of the markets right now, but that's what he's doing. Now, the crude, here, let's start out here, at the beginning of the crude. Now, our first trade on crude was right here. Excuse me for a second. All right, our first trade on crude was right here, and the first 2 trades were break-even trades. Right here is where we picked up the gold for the day. At that point, we had, I think we had 3 ticks or something like that. We had 4 ticks on gold, and we picked up 7 ticks right here on crude. And that's what ended up giving us the gold for the day. And then it pulled back up. I think that's where we got the gold for the day. Anyway, it pulled back up and it gave us another shot at it. We got 7 ticks on the first one and 4 on the second one to put us at +13. Then we missed a trade there, and we had a break even there. From 13, we went up to 14 right over here, picked up 1 tick. And then over here, we went to 18 on this move, and we had a break even right there. And I had said at the end of the session, look for, it was trading down here for the last, I don't know, last 5 minutes. It was trading right here. And I said, look for it to get up to here. And then as soon as the session closed, it slammed up there. And then it gave trade after trade after trade on the downside. There was 1 there, 1 there, 1 there, 1 there, 1 there. And then it turned around and tried to give some of that back right through here. And it gave a long trade right in here and another one right there. But it continued the move down. And this is all during the break. It had great movement during the break. I was sticking around for a little bit during the break. And I know some of the guys hung around a little longer in the morning session. But it gave a short there, a short there, a short there, and a short there during the break. Then it tried to turn around and go long, and it gave momentum long trade right there. And then it just got choppy. So crude oil was really active after the morning session. Okay. All right. So that brings us back here. Okay. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 14th day of July, 2021. We made 18 ticks in crude, 9 ticks in gold, and that put us at, 4 ticks on the ES. I know we made more than 4 on the ES, but that put us at +320 on the morning session. And today it took 20 minutes and 4 trades to get to the goal for the day. At that point, we were $100 a contract, and we took a total of 18 trades. So on the month now, we're at $6,127 a contract. That's over 9 trading days, averaging $680 per contract per 2-hour trading day. We've gotten our goal for the day on 132 out of 133 consecutive days. And that puts us at $87,018 on the year, over 133 trading days, averaging $654 per contract per 2-hour trading day. Now, if you've not taken the free trial, go to the homepage here at cfrn.net. And on the homepage, if you scroll down to where it says free 5-day trial, no credit card required, it's a big green box. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, we don't know that you took the free trial, so make sure that you click on that link. All right? All right, guys, that's it. With that, we're going to wrap it up, and we'll pass it back out to the Wet and Soggy Studio A in Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. Yeah, we need to put it on the right screen. So we'll try to do that. There, I think we got it.
There we go.
Looks good. Okay, recap of the recap.
Today it took 20 minutes and 4 trades to get to $100 per contract. 20 minutes and 4 trades.
Well, good job.
Thank you.
Good job. Let's see what the top 10 things are that we should know today. The 14th day of July. And for those of you tuning in or listening to this after the fact, there was no opening intro today with the music and the da-da-da because we had a flash flood in Phoenix, Arizona, where it rarely ever rains, but when it does, it destroyed our gazebo out back. I mean, it's a real mess. A real mess. It wasn't just rain. The monsoons are usually accompanied with high winds. So we had the winds, we had the rain. Okay. All right, 10 things we should know today, according to... Oh, they put up a paywall? Oh, okay. So, today we won't know what the 10 things are. Oh, it says I can continue reading it for free. I kind of enjoy it, so. Let's see if that brings down the paywall. By golly, it did. Biden says laws to restrict voting rights are an assault on democracy. Now, I know that most people in this audience probably lean towards, it just kind of makes sense that voting is a very important thing. I mean, if you want to buy a can of beer, you got to show your ID. If you want to do most anything in life, cash a check, get on an airplane, get into a nightclub, I mean, the list is endless. So I don't even understand why there's all this, even a discussion about why a person, I know that a few years ago I went to vote and I had forgot my voter ID. I had left my wallet at home, basically. So I had to come home and get my driver's license and my voter ID and go back. And begrudgingly, the lady, it seemed, she finally let me vote. So I don't understand how any of this is an assault on democracy. Senate Democrats announced a $3.5 trillion budget package. That's T as in trillion. COVID-19 cases rise in nearly every state. The highly contagious Delta variant spreading across the country. The number of new coronavirus cases is surging in 45 states, with just Maine, South Dakota, and Iowa reporting a decrease in new cases. In Delaware and Arkansas, new cases remain steady. Data from Johns Hopkins University shows that in 34 states, the number of new cases in the past week compared to the previous week are at least 50% higher. Now, well, I'll just move on. Biden to nominate former GOP Senator Jeff Flake as an ambassador to Turkey. Oh my gosh, that joke just kind of writes itself. Jeff Flake, ambassador to Turkey. You can figure it out. Iranian intelligence operatives charged in plot to kidnap author living in Brooklyn. Tennessee to stop vaccine outreach for minors. Boy, that's got to aggravate some folks at the top, like Dr. Fauci, who is the highest paid federal employee in the United States. The Crown, the Mandalorian tie for most nominations at the 2021 Emmys. Haven't seen them. Ransomware gang Reveal, however, it's R-E, capital R-E, and then V-I-L, however you pronounce it, vanishes from the internet. A Russian-linked ransomware gang that has hacked more than 360 U.S. targets this year vanished from the dark web Tuesday without explanation. The group's blog and payment processing infrastructure are both offline, and it's unclear if Reveal did this itself. Reveal encrypts computers and then demands that victims pay up, threatening to release sensitive files to the dark web if they don't. The group recently targeted global meat supplier JBS, which paid $11 million in May to keep Reveal from leaking its confidential files. President Biden on Friday said there would be consequences, and the U.S. may conduct an operation against the servers used to carry out its attacks. NBC News reports he also called on Russian President Vladimir Putin to do something about the cyber criminals operating in Russia. There are cases of ransomware gangs disbanding and then coming back under a new name. At least 72 killed in violent looting in South Africa. Wow. We should pray. We didn't have an opening prayer, so we will. 72 people are dead in South Africa following violent unrest sparked by the jailing of former President Jacob Zuma last week. What began as protests by Zuma supporters escalated into looting. Many of the dead were trampled in stampedes as looters rushed through the streets while the military tried to intervene. More than 2,500 soldiers have been deployed and about 1,200 people have been arrested. South Africa faces a high unemployment rate and rising poverty made worse by the pandemic. And Italy bans cruise ships from the Venice Lagoon. So there you go. The folks at the week feel like those are 10 important things that you need to know today. Heavenly Father, we thank you for your blessings, your mercy, your grace. We pray for the people in South Africa. Lord, we have ties to Africa. Not South Africa, but actually Agnes's brother lives in South Africa. Our ties are to Uganda, so I guess we do have a tie there once removed. And so Lord, we pray for those people. Empower the military or whoever's in charge to get this thing under control before more innocent lives are lost. And Lord, as we rise to meet each new day, we just pray every day that you fill us with your Spirit. Wherever we go, let us spread love and joy and peace and goodness and faithfulness. Let us desire to become more like you and to worship you in everything that we do, not just in church on Sunday, but as we wash the dishes or clean up after a storm. Help us desire these things so much more than the sin that entices us. Thank you for always going before us, for not leaving us, and for not forsaking us, even when we deserve it. In Jesus' name we pray. Amen. Okay. All right. It is Wednesday, 14th day of July, 2021. These are the numbers from around the world. These are the cash markets, the indices, as they're called. Starting here at home in the U.S., the Dow is up 29 points. The Nasdaq's up 12. S&P 500 is up 7.5. The Russell 2000, our man in the street, down 23. So the Russell's down a little over 1%. The other three major indices are barely in the green. The commodity basket, crude oil is down $1.84, trading 73.61 last. That's a drop of over 2%. Gold up $12.30, trading 18.2220 last. Silver up 7 cents, trading 26.21 last. In the Asian markets at the close, Nikkei down 109, Shanghai down 38, Hang Seng down 175. And the mover and shaker there would be the Shanghai. It's down just over 1%. And in the European markets at the close, FTSE down 33, the DAX unchanged, the CAC unchanged. That gives us a red day in Asia. Basically a red flat day in the UK. And it is a mixed Radio Wednesday here in the US of A, with three of the major indices, the Dow, the NASDAQ, the S&P, barely in the green, and the Russell 2000 deeply in the red, down 23 points, a little over 1%. So, with that, we'll go to Logic 247. That is our 24/7 around the clock Emini alert service. The channel opens for business Sunday night at 6 p.m. Eastern, and it remains open around the clock until Friday afternoon at 5 p.m. Eastern. The markets take a 1-hour break. The futures markets take a 1-hour break each day. So today's the Wednesday session, which began last night at 6 p.m. Eastern. The Wednesday session will begin today, will end today at 5 p.m. Eastern. Tonight at 6 p.m. Eastern, that will begin the Thursday session. So the alert channel is open around the clock. Also, the discussion group is open around the clock. So all of our members have 24/7 around the clock support. If you got a question, there's always somebody around to try to give you an answer. And because we all trade the methodology, the same strategy, use the same indicators, understand the same underlying principles about how price flows, how markets work, and the answer from one of our traders that's been with us for a while is every bit as good as an answer you'd get from me. So far this week, 36 alerts total, 11 never triggered, 25 actionable, which resulted in 5 stopping out. 20% of actionable alerts, okay, would be stopped out based on not risking more than $300 per contract per trade, less when possible, based on simple market structure and a simple 3-step process that we teach all of our traders. Now, that's a typical number. At this point, I usually say that's not a typical number, but that is right spot on. Over the last 154 weeks, we've averaged 20% of actionable alerts being stopped out, and there are currently over 7,700 alerts in the channel. In fact, pull it up, the exact number, 7,787 individual alerts. And the alerts look like this. Here's an alert on the Russell last night. It was alert number 7,786. Russell. The idea here is the window of opportunity, and that's what the alerts are all about. The alerts are about showing you where there's a tradable opportunity, and then you go to your charts, and that's where you get to use everything that you learn in the live training room each day. It's kind of like let's use a hunting analogy, okay? You go to the target range to learn how to shoot your gun and to be accurate, to become a marksman, okay? Now, when you go hunting, if you're one of these deep pocket guys that has the hunting expeditions, there's always scouts and trackers who will go out ahead of the hunting party and look for signs that there's an elk in the area. They look for poop. I don't look for market poop, but you get the idea. So the alerts are kind of like the scout. They go out and find out where the opportunity is and what obstacles there might be to that opportunity. So in the case of the Russell, the idea was when price, because I try to build at least 20 minutes into each alert, 20 minutes of time for you to get to your chart, observe the markets, observe the alert, understand why it's an alert, and then when the time comes, when the trade sets up, that's when you deploy everything you learn in the live training room. So the idea here is to be short the Russell 2226 with the initial target at 22.24, every alert has an initial target worth $100 per contract traded. With the exception of the NQ, because of its volatility, the initial target on the NQ is $200. And now we talked about obstacles. Okay, what would be an we want to get short at 22.26. Maybe we want to take more than $100 out of the trade per contract. So what obstacles do we need to be on the lookout for? Well, in this case, there was potential support at 22.20. If price can get through that obstacle, the next obstacle is at 22.05. And if price can get through that obstacle, then the weekly trading zone is always the final trade to target. On a short trade, on a long trade, the weekly trading zone above is the final target. On a long alert, the final trade to target's the zone above. On a short, it's the zone below. And from the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon, price is trying to get to a zone, either the one overhead or the one below. And once you understand how to use our indicators and read the chart, you always know which one price is trying to get to. This helps you determine where you'll find your high probability, low risk opportunity, and that you're actually on the right side of the street. In other words, you're not shorting a market where you should be long, or going long in a market where you should be short. Now, when you see the red X, that means it got stopped out. In the room, when Michael is training you, we use an 8-tick hard stop on every trade, on every market, across the board. He's teaching you the importance of always having a hard physical stop. And to simplify the learning process, we just use 8 ticks on everything. On the alerts, we use market structure to determine where the stop loss needs to be. And by using market structure in that simple 3-step process, the maximum risk is $300 per contract. However, not every alert requires a $300 stop loss. You employ that 3-step process that we teach you, and you determine exactly where the stop needs to go based on the current structure of the market. And you never risk more on a trade than the maximum profit potential. Like here, from 22.26 down to 21.97, that would be 29 points. That's the maximum profit potential of this alert. Okay. Now, if you know that you're going to get out of this trade at 22.24, you're just going to get your $100 and go per contract. You cannot risk more than the potential profit. So even though, you know, we've got 29 points of potential profit in the alert, if you don't plan to stick it out, if you plan to, you know, jump ship right here, then you have to base your stop loss and using market structure, same 3-step process, but you can't risk more than 2 points if all you're going to take is 2 points. If you're going to hang in there until the chart tells you to get out, then you can risk up to that maximum $300. Okay. Every alert follows the same format. The alert number, 7,787. This is the NQ. I want to be short at this price. Initial target. See, there's 10 points there at $20 a point, so $200 to the initial target. Then potential support, and then the weekly trading zone. Now, on the ones that get stopped out, we only recap the initial trigger. Whether it makes it to the target or gets stopped out, and as you see every day here on the show, most alerts trigger multiple times. Once an alert triggers, there's a greater probability of it triggering again than not triggering again. So even though we only recap the initial trigger, once an alert triggers, even if it gets stopped out, you should keep your eye on it, because there's a high probability that price is going to come back, trigger again, maybe again, That trade I left you guys with, or that trade idea I left you with yesterday on the show, I posted a chart in the discussion group. Let me find that and show it to you, because it's a good example of what I'm talking about. Yeah, here we go. Okay. Okay. So yesterday, we posted this, or we talked about this. We drew in this area. If you missed yesterday's show, you can go back and watch it. We knew that there was potential support at the low of this candle. And so we said if price can break through that potential support area, we have a window of opportunity down here. And so on the next 30-minute candle, we didn't make it quite all the way through the window. We made it from 65 down to about, I don't know, 63, I think it is. And then price got back up above that area. Okay. Down we come again, this time all the way through the window. Back up again. Down we go again. Back up again. Down we go again. 1, 2, 3, 4. The tradable event was the break of the 1 p.m. Eastern candle low right there. As discussed on the show, 2 minutes to I was just doing a running commentary yesterday afternoon. 2 minutes to the next candle. So we got 1, 2, 3, 4. And we get another candle open. New candle may lead the way. Tradable event would be a break of the low of the current candle. 1, 2, 3, 4, 5. 5 times. Potential support on the way down would be this previous swing low, this bullish cross, and a big window of opportunity all the way down to the weekly trading zone. And then yesterday afternoon, the body of this candle was engulfing the body of the previous day, but not the wick. See how the red candle engulfs the green, but not the wick? Some consider this a bearish engulfing candle. I don't personally, but because many do, and it is on a daily chart, there will potentially be, most likely be, some downside follow through on the open tonight. The step line and yesterday's low are very important areas for potential support. There's yesterday's low. Okay. 54/55 is also important, as we had a daily bullish cross that has not yet been retested. Then I added another trend line onto the daily chart, which is a parallel of this. I'll just go to the live chart and show it to you. Okay, let's do that. Or first, I'll give you a chance to grab a screenshot of the CTAs if you would like. Once I find them. There we go. Okay, so the alerts got out last night at 6:25 p.m. Eastern. Now, the logic alerts that we were just talking about, those come out around the clock as opportunity presents itself, based on current price action, with that minimum 20-minute buffer built in. Okay. Now, the CTAs are published as a static report shortly after the Globex open each evening. The numbers are good for the entire session. Just like the weekly trading zones, once they're published Monday morning, they're good for the entire week. Once the CTAs are published, they're good for the entire session. So the best way to handle it, to put 2 lines in the sand, one at 43.79, one at 43.48. Once this report is published, if price starts trending up towards 43.79, then you'll watch for alerts in the alert channel, and also simply look for opportunities yourself in the market based upon everything you learn every day in the live trading room. So if price starts trending up to 43.79, you're looking for opportunities to be long. If price starts trending down to 43.48, you're looking for opportunities to be short. The same for each of the markets we cover: S&P, Dow, Russell, crude, NQ, gold, and silver. Again, these are based on historic price action. Logic is based on current price action. So daily chart of the S&P. Here we are. Okay, that candle from yesterday, it engulfed the body of the previous day, but it did not engulf the wick. Now on this day, see, today's Wednesday, Tuesday, on Monday, we talked about price potentially finding support down at the step line, which it did. And we had yesterday, and now today, price has again found support, as I explained in the discussion group last night, that the first spot for potential support on the way down would be the step line, and that's where we found it. Let me go back to that real quick so you understand exactly what I'm talking about. ES daily at the step line, first support. 43.53.50 was the daily step line at that point in time. Now it's at 43.55. Okay. All right. Blue and climbing is directly above price, so the first potential resistance was up at 43.71, which is roughly right about where blue and climbing is right now. So the purpose of the daily chart is to identify where major support and major resistance are, because price is always trying to break the previous swing high or the previous swing low. And using our indicators, you always know what the market's trying to do. We always know with certainty what the next high probability move is. We also know that 20% of the time, price fails to do the next high probability thing. We have the data to back that up, 7,700 and however many alerts I just showed you that we were on. Okay, over all those alerts, which are all trend trades as defined by our indicators on a 30-minute chart, 20% of the time, the market does not do the next high probability thing. And you can't change that, because sometimes the market just changes directions for no apparent reason. Most of the time, however, the market gives you clues. If you understand where potential resistance and potential support is, that's a great tool. Some people will tell you that's horse and buggy, man, come on, plug in a computer, we got algorithms now. That's fine. It doesn't change the underlying fact that price on a 1-minute chart, a monthly chart, and every chart in between, even a range chart, price goes from support to resistance, back to support, back to resistance, back to support, over and over, again and again. Now, when you zoom in on these smaller time frame charts, you cannot always see that big picture. You may not know where major support and resistance is by looking at a smaller time frame. So if you get tunnel vision just looking at the smaller time frame, now Michael's very skilled. He just stays on the range chart throughout the whole session because he wants to show you as many trade setups as he possibly can during the 2 hours. If you're relatively new to trading, you really need to employ multiple time frames and know where major support and resistance are that you cannot see on the small time frame that you're actually using to execute your trades. Okay? It's as simple as opening up an identical chart of the chart you're trading from, putting it on a higher time frame. Michael likes a 15-minute. My go-to is a 30-minute, but I always like to start out looking at a daily, because I can see now we've got major support at the low of the day, 43.50 and major resistance at 84.5. Okay. Now yesterday's high was 83.75. Today's high is 84.50. Today we do have an engulfing candle, or what's called an outside day. But because we have a green body, it's not a bearish engulfing candle. It's simply an outside day. Slightly higher high and a lower low than the previous day. So the high, 83.75, is now 84.50. So we'll scoot this up to embrace 84.50. It's so close. I don't know if we'll get it exactly right. Fibs are in area anyway, so this one says 84.75. This one says 83.75, and we know that the high is 84.50. Okay. All right. Now, the 24% fib of the entire move up, which began November 2nd, the shallowest fib retracement is way down here at about 41.10. The last leg up, which began June 21st to the new high today, the 24% fib retracement is here at 43.22. Now, once we take out this swing high, okay, we have a slightly higher high today, but once we hit about the 50% extension, if that's how the market goes, then this will become our new last leg up. In fact, on your own chart, see, what I'm measuring is this low to this high to give me this 24% fib. However, you could draw fibs from this low to this high. Okay, but I want to see the market really give us a nice pop to the upside before I switch the whole last leg up thing to this leg. Is this actually the last leg up? Yes, it is. Okay, but the purpose of a daily chart is to kind of get the bigger picture. I'll probably mess my chart all up by doing this, but I'll try to give you an idea. Yeah. So 24, 38, 50, 62. Okay. That's using this as the last leg up. I'm still using this as the last leg up. You, of course, can use whichever one works. If you got enough charts, you could use them both. Okay. So we know where major support and resistance is. The daily chart has served its purpose. We know the candle is green. We know we're up against resistance. Blue and climbing. You see over here on this move how the step line is to the left side of blue and climbing. Price is to the left side of the step line. That's what you want for a long trade. Doesn't matter what time frame. Blue and climbing. The further to the left the step line, the better. And then price to the left. And then as price climbs, you'll notice how the step line starts to work its way over to the right side of blue and climbing. That's typically an indication that the move is running out of steam. See how price started to walk sideways here? But then we got this boost of energy, this buying pressure that came in here. And so price is now, or it was, see how price got below blue and climbing? On the way up, blue and climbing can be resistance. And we got above blue and climbing. So we overcame that obstacle. But then yesterday's close put us back below blue and climbing. And so in this scenario, blue and climbing is support. It indicates the potential for higher prices. When blue and climbing gets directly above price, like it is right here, then it actually becomes potential resistance. It's telling you that this move may have run its course, and you should be prepared to take profit or do whatever it is you do when you think the market has stopped moving higher. I'm not saying the market's not going higher. Although we had a new intraday high yesterday, the close on Monday stands as the all-time historic closing high, and that price was 43.75.75. We exceeded it yesterday but closed well below it. We've exceeded it today intraday, but if we were to close right here, the all-time historic closing high on Monday would stand, but we still have the afternoon left, so let's see what happens. All right, here's the S&P. Okay, the CTA last night for the ES was to be long at or above 43.79. Okay, these are the lines in the sand that I was talking about. Now, the vertical line separates two. This is the Tuesday session, and then the first candle right here. That's the beginning of the Wednesday session. The market opened last night at 6 p.m. Eastern. Here's the opening candle. We opened below the BBC, so we anticipate lower prices. Price gave us a leg and a retracement and a leg, but we didn't make it down to the CTA. Buyers came in. Here's the London Open right here. Okay, heading into the London Open, I mean, look at this down move. London, typically when London opens, the market continues in the direction it's trending. But in this instance, the market reversed on the London Open. That just shows you how important the Globex session is becoming. You know, it used to be. Hang on for me just 1 second. Okay, back. Sorry about that. So we never triggered CTA on the short side. Got a zone up at 43.83, and the zone below is down at 43.39. We had a bullish cross right here at 6:30 a.m. Eastern. Now, prior to the bullish cross, we get candles that start closing above the BBC. Green line, BBC, bull bear cross. Bullish above it, bearish below it. All markets, all time frames. Everything we do is fluid across all markets, all time frames. So this is the first green candle that closes above the BBC since this one. Okay. We got below the BBC and we stayed below the BBC into the close yesterday. And then we put in the low basically at the London Open. So once we close above the BBC, we start thinking higher prices instead of lower prices. Over here, price was trying to get to the weekly trading zone below, but once we get a close above the BBC, we have to change our thinking. Even if we think prices should go lower, we have to honor whatever the market's doing because the market's always right. And so we get a close above and then a close below, and then a close above. Finally, we get the confirmation of a bullish cross. Okay, now we're definitely looking for opportunities to be long the market. Okay. Price cruises up right through this yellow line, which is a weekly trading zone from last week. I've left it on the chart because it was important on Monday, it was important on Tuesday, and if the market turns down right here, I'm going to have to say that it's still important on Wednesday. This is why, even though all of our traders, get their weekly trading zones on their charts Monday morning at 6:15 a.m. Eastern since December 14th of 2009, I highly recommend that you hang on to the previous week's zones, because one or more of those zones may continue to be important in the new week. Okay. Now there's two numbers for each weekly zone. Like this zone is 83/84. This zone is 39/40. For a decade, I used two lines, but I realized that I could just use one line and it would make my chart less cluttered, because everyone who's a member knows that there's two numbers to a weekly trading zone. So I can display 43.39, and instinctively, I'm always displaying the first number. So it's 43.39/43.40. This is how it used to look for a decade. Sometimes it takes us a while to figure things out. $43.40. Okay. If you go back historically, look at any old videos, or on YouTube. We archive every daily show on YouTube. You can go back a week, a month, a year, 3 years, whatever. And you can see exactly how the weekly trading zones laid out using the two-line format. It's no difference. Okay. So we run up to the CTA. We trigger the CTA. We hit the weekly zone at 43.83/84. So from 79 to 84, or 79 to 83, it's a 4-point move. $50 a point, $200 per contract traded. When price hits resistance that it can't overcome, it goes and looks for support. And it found support right here. Right across these lows here. Okay. Buyers came in. This was the 12 noon candle. This was 11 a.m. Eastern, 11:30, 12 noon, the 12:30 candle. Now we just started the 1 a.m. Eastern. As you can see down here in the corner, Pacific time, it's 10 a.m. Eastern. Blue and climbing provided support all the way up. You'll notice we didn't have a single candle close below the step line until right here. So if you're looking to just take a couple points out of a trade, that's not really important to you. If your trading style is that you want more points instead of more contracts, or maybe you want both, maybe you want more points and more contracts, okay, then this does become important. Because as this move started out, step line was on the left side of blue and climbing. And then it started to straddle it. Then it moved to the right side. Once it goes to the right side, the first candle that closes on a long trade, red below the step line, that's the exit signal. So the exit signal would be 43.73.5. That's the closing price of that candle. And so Michael talked about, he thought there might be some movement during the break, and apparently, this is what unfolded. Price came down. We did not reach this swing low. Buyers drove us up through the VBC. They hit red and falling, which we expect, red and falling, we expect that to be good resistance until proven otherwise. When price pulls back to blue and climbing, we expect it to be good support until proven otherwise. And that's what happened right here. We had a red candle, Then that candle opened here. Blue and climbing acted as good support along with the step line and sent this rocket ship up at 8:30. Maybe there were some good economic reports at 8:30. All right, so now price is sort of trapped. We got resistance overhead, red and falling. We got support below at the BBC. We only buy above the BBC. We only sell when price is below the BBC. So sellers here, buyers here, sit on your hands here till this is resolved. How is it resolved? Well, it's resolved by price closing below the BBC, and then we trade this window of opportunity down here, or buyers come in, get us above, we close above red and falling, and then we trade this window of opportunity up here. Now you got to watch that swing high right there, because that's potential resistance. You've got clear skies from about 43.74 up to 43.76. If we get above 43.76, then 43.77 up to roughly 43.79. Both of those are rather cramped and difficult from a 30-minute perspective, but using the three-step process, you can see inside of these 30-minute candles. A lot goes on inside of a 30-minute candle. But right now, where's price headed? Back to the BBC. Question is, what will happen when it gets there? Will buyers make a stand and send us higher? If they fail to make a stand, we'll head lower. It's really that simple. All the indicators, oscillators in the world will not answer the question of what's going to happen when price gets to the BBC. We know what the highest probability thing is. The highest probability thing is that the BBC will act as good support until proven otherwise, which would be a close below the BBC. See, like this close here led to this, right? And then the close back above led to this, but we ran into an obstacle, and that obstacle is now walking us back down to where the market has to make a decision: bullish or bearish. This is where you have to use patience or look at a different market. Okay, on the Dow, here's the open last night. We walked right down to the CTA but didn't trigger it. Support sent us to resistance, sent us looking for support. The CTA trigger was 739, and we traded down to, we'll call it 680 for the sake of math. We'll call it 740 to 680. $60 points, $5 a point, $300 per contract trade. And then London Open, just like on the S&P, buyers came in, got us back above the BBC. We made a run at the weekly trading zone overhead. We didn't quite make it. The swing high was 946. The actual zone is 34,960 / 34,965. We did trigger again here on the short side from 739. We dropped to 712. And it looks like price wants to do it again. But this bullish cross represents potential support. On the Russell, price came down to the weekly trading zone, which acted as good support. Price consolidated. That's the most likely thing to happen. And then we reached down to the CTA, right to it, right to the tick. 3 a.m. Eastern, London open, the market reversed. Did the same thing as the S&P and the Dow. The swing high was 2254.9, and zones at 56/57. Zones are an area just like fibs. So then price comes back down. This time we trade through the zone, we trade through the CTA, and from 22.26 we put in a swing low at 22.02. So that's about a 24-point move at $50 a point, $1,000 per contract. Buyers came in, drove us up to red and falling, which we expect to be good resistance until proven otherwise. So far it has been good resistance. That gives us a window of opportunity right here. Oh, roughly 2210 to 2205. There's a 5-point window of opportunity because we have to expect this area to be good support until proven otherwise. That's if sellers win this battle. We got to take out this low, and then we don't have any other obvious signs of potential support until major support as defined by the 30-minute chart until we get down here. It's about a 5-point window. Okay. All right, on the NQ. This was the beginning of the session. We opened just below the weekly trading zone, then we consolidated at the zone, and then we had a bullish cross, which drove us up to the CTA at 925. We ran up about $100 per contract, got back below the trigger, triggered again, and that trigger took us up through. Now, only 3 things happened at a weekly zone. Consolidation, the most likely. Second most likely, rejection. Third and least likely is the slice. Price sliced through the zone like it wasn't even there, and then it retraced back to the zone it sliced through, and then it continued in the direction of the slice. This was a big green candle at one point. By the time the 30-minute period was over, it had been reduced. Now, if we look at yesterday's high, so if you were trading long on a move above this weekly zone, it should not have come as any surprise that the market ran into resistance here. We have to expect that to be resistance until proven otherwise. In other words, we want to see price get above this area, hold on a pullback, and then trade the follow through. Okay. So we triggered the long side here, 925. And the target was at 45, so it was a 20-point target, $20 a point, $400 per contract traded. Then we came down to the zone where we found good support. We spiked it a little bit, but that happens. Zones are an area. So this was all just consolidation here, not good trading opportunities. Okay. So we hit the zone support. We went from this zone down to this zone, back up to this zone. So the move back up took us from 1875 to 945. So that's 45, 55, 65, I don't know what, 70 points at $20 a point. It's about a $1,400 per contract move from this zone to this zone. And that happened over the course of an hour. Now, these triggers were supported by blue and climbing. That's what you want, long trades. This trigger, even though it triggered and ran all the way to the zone, you got red and falling overhead. Now, the fact that price got there, just as it was running into the resistance, you can't count on that happening. Sometimes good things do happen to good people, right? And that's what, so if you've got a long trigger for any reason, but you've got red and falling right overhead, you should stay away from it. Same thing if you have a short trigger right above blue and climbing, potential support, you should stay away from that. Unless you just want to take a shot, which is not a good trading strategy. Crude oil fell out of bed. Boy, did it ever. Alright. So here's the open last night, this candle, right below the weekly zone. So we come down to the BBC support, up to the zone resistance, back to the BBC support, up to the zone resistance, back down to the CTA trigger. And this first trigger dropped only to 74.55. Well, it's okay. 55 to 70, that's 15. That's $150 per contract traded. Price got back above the trigger, triggered again. Remember, once an alert triggers, there's a greater likelihood of it triggering again and again, even again, and not triggering again. On this trigger, we made it, the weekly zone is 74/74.05. And the low of this candle was 74.08. So it came within 3 ticks of touching the zone. That's one candle and went from zone to zone and then back up to the zone. From 74.05, from 74 to 75.20. That's $1.20. Oh, shoot. That's $1,000. That's a $1,500 per contract move. So from zone down to the zone, back up to the zone, back down to the zone. From 74 to 75. Anytime crude moves $1 in price, as it did here, from 75.20 to 74.20, okay, that's worth $1,000 per contract traded. So it made that trip down once, up twice, down again 3 times. That's what the market made available. And we consolidated a bit right here at the CTA 74.70, and then this time we dropped through that zone and we went from 74.70 to 72.70. That's a $2 move. 74.70, and we've gone beyond that, but just for the simplicity of math, 74.70 to 72.70. It's a $2,000 per contract move, right there. Gold. CTA did not trigger on the short side, did trigger on the long side. Here's the open last night. The bullish cross. We get to the weekly zone, which is 1813/14. We consolidate for hours. We finally get a close here above blue and climbing, and then the move starts. And then at 8 a.m. Eastern, this candle triggered the CTA at 1820. The zone overhead, or the target, was 1824, so that's a $400 per contract move. Kept going. I ran all the way up to 1831. So that's an $1,100 per contract move that the market made available. Our published entry was 1820, and our published target was 1824. So 400 out of the whole move. And then price came back down, but it didn't quite get below the trigger. As you can see, the price behaves around a CTA very much the way it trades around a weekly trading zone. Consolidation, rejection, or the slice. Now on a CTA, the slice is good. On the weekly trading zones, the slice just means you're going to have to be patient and wait for the market to come back so that you can determine what direction you really should be trading in. And then silver. Here's the open last night. The bullish cross. The trigger. From 26.21 we ran up to the target at 26.35. So that's 14 pennies. 2 pennies, 100 bucks. Price tried to get to the zone at 26.60. It only made it to 26.57 and a half. So missed it by a couple pennies. And you'll notice how price climbs the back of blue and climbing, the step line. Doesn't cross over until here. Now, waiting for the exit signal is, can this happen? Yes. I mean, using the exit signal philosophy would have got you out like right here. Not optimal, right? Not a loss, but is this typical? No, it's not typical at all. Usually the exit signal will get you out somewhere pretty close to the swing high or swing low. But it cannot ever get you out exactly at the swing high or swing low, because nobody knows it's a swing high or swing low till after the fact. Not man nor machine. So here we sit. We have an outside day. Today's high, slightly higher than yesterday's high. Today's low, slightly lower than yesterday's low. The body of this green candle has shrank since we first started the show. We know we've got potential support sitting down here. At the step line. Today's low is very important. 43.50. If we break below today's low, then the next spot for potential support would be the Monday low, which is 41.75. $43, 41, 75, yeah, right there. If we take out that low, then we've got the 24% fib price extension. But the one I'm really interested in is the 24% fib price retracement of the last leg up. Here's the 24, the 38. The daily VBC is just above the 38. Then there's the 50, then there's the 62. And way down here is the 24% fib of the entire move up that began November 2nd. So we just take it a little bit at a time. We're forming a little bit of an odd doji on the day. There you have it. Good word for the day. We've been talking the last 5 days about answering the big questions in life. If you missed it, you can always watch it on YouTube. Today we'll talk about disagreements, how to handle them. How should we as believers, as Christians, and there's always going to be disagreements in life, in business, in marriage. Acts 15:37. Barnabas agreed and wanted to take along John Mark, but Paul disagreed strongly. Paul and Barnabas were a great missionary team. On their first tour, a young man named John Mark joined them. But for some personal reasons, he left and returned to Jerusalem. On their second missionary tour, Barnabas wanted to take John Mark with them again, but Paul said he thought he was unreliable and said no. Their disagreement was so sharp that they separated, and Barnabas took John Mark, and Paul chose Silas. Acts 15:39. So imagine, if you will, two spiritual giants who couldn't resolve their conflict. Yes, it happens in the best of circles. Paul was the totally focused, no-nonsense type. Barnabas, whose name means son of encouragement, was the long-suffering and lovable type who believed in reconciliation and refused to strike anybody off his list. There are two valuable lessons in this story about handling disagreements. When it comes to our friends and family members, we all have blind spots. Rare is the leader who has the objectivity to look beyond a blood bond and focus on what is best for the organization. As a result, the vision God gave them often suffers. We've all heard, it's don't do business with family, it never ends well. I'm sure we've all heard that. Some of us may have experienced it. And of course, there are many family businesses out there that have thrived. Although they say in family businesses, it's usually the third generation that drops the ball. Not grandpa, not dad, but grandson. Because if a business has survived 3 generations, it's probably prospering and doing well. So while grandpa, had to work real hard and pioneer it, and dad probably shared in that, by the time it gets to the grandson, it's sort of like being born into, royalty on some level. All things being relative. That's a pun. All things being relative. Okay, you get it. All right. Number 2. There's 2 reasons, 2 valuable lessons in the story about disagreements. I just gave you the first one, the second one. Sometimes you need a wise and trusted third party to help resolve the problem. When it comes to trouble in the church, Jesus laid down clear guidelines. First, you must go privately, one-on-one, and deal with the issue. Second, if that doesn't work, you should take 1 or 2 others with you and try to resolve it. Third, you must take the situation to mature spiritual leaders and get their input. You can read about that in Matthew 18:15. That's the scriptural way to handle disagreements, and it should be our way too. When you have aught with your brother, whatever it is, it's best to just talk to him. Okay? Often, we can prevent things blowing up out of proportion if we just talk to him. The worst thing we can do is start talking instead of talking to them. Part of the human nature is we start to talk about them, behind their back to others, snide comments. Okay, that's a surefire way to find trouble. So try talking to them, not talking about them. If talking to them doesn't work, then we need some kind of mediation. Maybe you have a shared friend. Maybe there's Bill and Bob and John, and Bill and Bob have a disagreement. Then they say, you know what? Why don't we get John's input? Why don't we see what John has? That's got to be somebody you really trust. Otherwise, John will be talking about it behind your back, And then you can go to your pastor, some spiritual authority. Maybe you go to the same church. But disagreements happen in life, in business, in families, in churches. We're all unique individuals. God gave us each unique personalities and qualities and purposes. And we're just not going to agree all the time. However, it doesn't, and look at the Middle East. How long has that war been going on? We talk about a 20, we've been in Afghanistan 20 years. How long have those people been fighting? Since the beginning. It is written. So, small things can become big things if we don't deal with them. So I encourage you today, if you have aught with your brother, talk to him, work something out. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.